Hey guys, this is George, and we are going to do a market review and trade review. We caught a couple of really awesome trades after the room closed, and I wanted to share that with you. So let's take a quick look at how my the flow of the day, the flow of the trades that we took. So we started off with trading three contracts, and I tried to keep it as tight as possible with a 10-point stop. I was looking for a 5 to 10-point stop, and I was looking for, a run up in my direction. And the first three contract trades got stopped out, and we ended up being around the equity low of 13.25. Then we started to catch a lot of decent, solid trades, and then there was one massive trade that I caught right after the room closed that really made a huge difference in how my day is closing. So let's take them one at a time and see what we can learn from them. So here we go. And it wasn't necessarily an easy day right at the open. After the Globex run, the market really spent some time consolidating, and that lend itself to a lot of back and forth price action where a 5 to 10-point stop was getting hit more often than it should. So that was the first one, and we were short, and the market just came in and took us out for 10 points on three contracts. Okay, then we came back in, and I was like, all right, I'm gonna look for a buy and a reversal here, and I flatted that trade. Then we went short here and got stopped out for less than 10 points on that trade. So now we have two stops and a flat. And yeah, we got another one right here. Okay, so that's 10 points. And I was like, okay, so the market was really, zigzagging, and there's no follow through. And then here we started to catch some traction. The market is starting to get back in sync on the long side, and before that happened, we had one opportunity for a short, but we took it as a scalping opportunity. We made a little bit of money on that, and then this trade happened. Let's see, I think, and this trade happened right here. So we got into three contracts at 204 on a pullback, and we ended up making close to 20 points on one of them and 5 points on one and 2.5 points on the other. So the accumulation of all of that got us to this level here. Then let's just keep going. Market started to stabilize, higher lows started to show up, and we ended up taking another long here. We didn't stick around in that one for too long, but it was three contracts. I added one trade here, and the market pulled back on me, and I ended up making a little bit on that trade. So at 469, actually, yeah, that 553, 581. Then I took one more long here for a flat. Okay, and that ended my room. Then I started looking at the market, and I saw a couple of things going on. First one is an attempt at a continuation trade, and that one on three contracts I flatted that trade, and then the big trade. So basically at this stage, the market was lining up. The 200 and the 100 were in sync. The market was in harmony. And then we got a pullback into a couple of levels. One of them is the 52. So the whole 50 to 40 level was a solid support. And I took the 52, and I didn't even take a hit on that one. The candle closed, I took one more, and then a third one, then a fourth fourth trade on the pullback at 54 and a quarter. So the stop for that whole rotation and the average of it was 4 contracts at 255.75, and I would have taken a stop at 50 and under the low of the most recent run up, which would be the 52 where I got in, and under it is the 50. So my stop is basically 5 points. Okay. And then the market started to move. So I took an initial and another one, and I got out of 3 out of 4. So that's automatically the trade is a positive trade. And I went break even. And I was like, okay, that's the question that I'm going to be asking myself throughout the year of 2024 is where can I add to a winning trade? That's going to be a big thing for me, a big thing for all of us in the room is where do I add to a winning trade? And instead of trying to have the trade go against me, for example, and add at 45, then if it comes and tests the bottom end of it, I'm going to add at the 40 and try to accumulate a range of prices here before the market runs up. And I'm going to assume a lot more risk when I do it that way. How about if we start with 1 contract or 2 and then add to the trade in pocket some money, then on pullbacks, add to that trade as it moves in your direction. This way, when I get stopped out, I'm going to get stopped out, on 1 contract, 5 points. That's $100. And when it's working, and that's a perfect example of a trade that really worked, okay? And there's a lot of them all over the place every single day. I mean, this trade and this type of pattern, it presents itself often. Then an ad and an ad and an ad can turn a risk profile of $100 stop to a profile where your ads can get stopped out for a break even, or when it runs the way it's running right now, I'm gonna be cashing in a big way. So the market ran up, and I added to it right here at a pullback. It's a minor pullback, but it's still a pullback within the range. And the beauty here is my cost basis is so low that I can afford this minor pullback as an adding opportunity, because if it dips any further, I'll pocket a little bit more money and just gonna stop the trade. But here, that was an example of just pure momentum in the market, and it just ran up, and I just continued to hold on to it. I took one at 86 and then one at 94, and the conclusion of that trade. But that was such a massive one between the initial ads, the exits, and the add into the conclusion of the trade got us from basically 550 to all the way to up to 1200. So it's about $1,800 trade in that sequence. And the move, I mean, you're looking from 50 to 90, that's a 40-point move. So we ultimately captured the majority of this move. Then the market was a giver, be honest with you, and it continued to perform. And here we got a pullback into a trade. I actually got in the same exact way. I got in one here at 78 at 78.75, beautiful. And then we got in an ad, and then the market ran up a little bit, and I had basically about 15 points in one of them, and I took it. And when the market pulled back, I flatted that second trade and was like, okay, I'm done here on that rotation. But look what happened. The market just had a lot of momentum. The harmony wave was in your favor. The market was the 200 and the 100 was in sync, meaning that there's a bias to the long side. Just basically everything was lining up. Okay, here that was a beauty as well. It was a captain setup. Long, it ran up. I mean, it was just starting to give, and it gives nicely. So that's another trade. I believe it was right here, the 255. Yeah, that's it. right there. The market pulled back into the middle of the range. That's another level, and I had a 5 point stop, and I was looking for '05 as an out. So if we break that trend line, I'm gonna be gone. And really, I needed to add to it at 16, and then look for more ads exactly the same way I did it before. But here I elected, because it was extended. I mean, the market was very much so extended, and boom, I just ran with it and ended up catching that run. And right here was target number 6, this level here. So I was taking really a substantial risk by taking it, but everything was lined up like it was the high of the day, and we got a pullback, and we had an entry at 73, and I took that entry at 70. Actually, it was 73, and then I had a couple of entries earlier on that one candle reversal. So I end up with a 4 contract trade, and I was getting nervous. I'll be honest with you, I was getting nervous with it because we were lit at target number 6. Like, I don't, I don't necessarily like to take target number 6 entry points, especially with 4 contracts. So I end up just making a little bit of money on 4 contracts. It adds up, to basically $300 on that trade. And I was like, okay, I gotta lay off this trade. Okay, and just to see it just boom explode to the upside. That's fine. And here we got a captain setup. So I had an out at 71 and a quarter off that buy signal, if I stuck around. But nonetheless, ended up at 1857, and I just called it a day. And then, you're getting this type of behavior. The market continued to go higher, higher, and now this is where we at for the day. And we're looking at the structure of the market, and after that decent, a lot of noisy fluctuation and consolidation at the open, really the market broke after 11 o'clock and just remained in the same tone of pullbacks and buy, pullbacks and buy, pullbacks and buy. And that's how I ended up, turning my day around, and that kind of puts us in a really good position for the month. Let's just take a look here. Summary and summary. Here we go. Analysis. Here we go. So that's the 1857, and that puts me on equity high at 5708. And we have a decent month so far. Okay, and let's just keep working. The key for 2024 is to reduce your risk profile and only add to trades that are working in your favor, and not to cost average into a market that is essentially pulling back on you significantly. Like these trades, they need to be working and working quickly, or you could take a small 5 point to 10 point stop and just move on to the next one and the next one. I wanted to share that with you guys today, and we will see you bright and early on Monday morning. Have a nice weekend.